What's up, guys? Welcome back to Track the Harmonic. I'm your host, Lord MC, and in today's episode, we have an exciting lineup as we dive deep into the world of harmonic technical analysis and explore some of the key economic indicators that will shape the upcoming week. But before I get into that, I just want to make a quick announcement that the 5-day free trial to the Discord is officially closed. So for those of you who did take advantage of that, I know a lot of you guys are upgrading your membership. So if you are still considering or are interested in joining the Discord, I will have the link to the Discord in the description box below. So if you're the type of person that wants to learn more about harmonic technical analysis, the Discord is all about that, and we have a lot of educational resources and material at your fingertips to help you get on your way there. So if you're considering joining the growing community, I will have the link to the Discord in the description box below. So before I get into the details, I just want to quickly break down the crucial topics we'll be tackling up this week. So before I get into that, I just want to mention that I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into the first important data that we have this week, and that one of them is being the FOMC minutes. In no particular order, just FOMC minutes. What is it, right? So it's just a stands for the Federal Open Market Committee. It's just a treasure trove of insights that provides behind-the-scenes look at the Federal Reserve's decision-making process and shedding light onto their outlook for interest rates and monetary policy. So understanding these minutes can give us a significant edge in predicting market reactions, right? So the next important data we have this week is also GDP, or the gross domestic product, as it's one of the most comprehensive measures of a country's economic performance. So it reflects the total values of all goods and services produced within a specific time frame. So this vital indicator can also help us gauge the overall health and growth trajectory of an economy, which could offer some valuable clues on market sentiment and potential investment opportunities. Thirdly, we do have PCE again. I know it feels like every other week we have something going on, but as where we are in the market, we definitely have to pay attention to these data that's coming out every week. So PCE, the personal consumption expenditures, provides us a glimpse into consumer spending patterns. So this is the engine that drives a significant portion of the economic activity. So the Federal Reserve is the preferred inflation gauge, so it makes it an important indicator to monitor for potential shifts in monetary policy. So understanding its impact on the market can help us also fine-tune our trading strategies. Lastly, like every week, we have jobless claims. So this economic indicator reveals the number of individuals who have basically filed for unemployment benefits during a given week. So by tracking these jobless claims, we can better assess the health of the labor market, identify employment trends, and anticipate potential impacts on consumer spending and overall economic stability. So it's a critical piece of the puzzle that shouldn't be overlooked. So having said that, let's jump into the most important part of the video here, the harmonic technical analysis. So jumping first over to the SPY here. What happened on Friday? We went as high as 420.72. Crazy to see that the SPY went this high, the low being 417.35 before closing the day at 418.62. So harmonically, what are we dealing with? We have a harmonic bearish pattern still playing out, and what looks like we officially finally close above XA here and are looking to attempt potentially hop at 423.62. Now, if we bring over here what the HSI is telling us here, the HSI is the harmonic strength index. It's basically, think of it as the RSI within the harmonic pattern. So as far as the HSI here, the HSI did cross the midline and is looking like it wants to go to these overbought zones. So these overbought zones would probably take it to that hop potential target at 423.62 should the market continue pushing. So I wouldn't, if you see that the market's continuing to push here, you have potential here. The MACD has also flipped green here after you breaking this long time channel here. We were trading between this 414 and 404 range. You finally broke out. So to the upside, we could see 423.62. Should you not fail, or should you touch 423.62 and come back down, you could potentially come to see 414, then 401, and then 393.81. So I'm going to bring up my drawings here because there's some important levels that we should look at here. So where we got stopped. So for those of you, I know there's a lot of lines here, but bear with me. Track this line right here that we have here. So this line follows from the 2009 lows. That's when the market crashed in 2008, and the lows were in 2009. So this line has been shown in the past as a heavy level of resistance, like it did back here in December. We rejected hard and we came back all the way down to the 375 range. Back here, we did break above that line, but we failed to continue pushing, and that's what gave us the March lows here, right? So And the next time we touched this line again was right here, and we got rejected, and we came down just to around 404. Where was this? 403.74. So now, if history repeats itself, are we going to actually finally break out of this, or are we actually going to come down to potentially complete this type 1 reaction here and go down to 401.93 and then potentially target 239.381 to finish this harmonic bearish bat pattern? So it's too early to tell if it's going to come down here. I do think there's a possibility that you do finally fill this gap and then test 423.62. If we jump over to the weekly has gives us a different harmonic pattern here. If I take away my drawings here, we have a bullish D crab where we are above target 1 here at 404. The type 1 reaction is still playing out here to potentially come out to hit that target 2 at 433.02. So the HSI did bounce here. Still too early to tell whether it's going to be continuation. As far as how did the volume look, obviously of a technical breakout, you're going to have volume increase, and that's exactly what happened compared to last week. Low volume, and today, this week we did have a breakout, so we had volume increase. So if this continues on the weekly, you could see potentially spike test target 2 at 433.02. Otherwise, you can come down back down to 404 and then potentially do a type 2 return back up to potentially hot. Too early to tell, too early to call out for that, but we have to see what a SPY is going to continue doing and moving forward into a very important week. So volume on Friday did increase from Thursday's close, but I think this close here was a win for the bulls. So we'll definitely see if there's more continuation. Obviously, I forgot to mention in the earlier part of the video that one of the key indicators that we also have to be paying attention to is the debt ceiling. So that's an also important topic that we should be paying attention to as well. So jumping over to the triple Qs here. Okay, so the triple Qs. This is one of these craziest things I've seen in a while where the triple Qs is going. Looks very topsy-turvy in my opinion here. You have the RSI completely overbought here, and you're potentially coming back down to that 70 range. So if this continues pushing upwards off of this bearish bat pattern where HOP is now at 345.72, you could potentially see that type 1 return potentially coming back down to play out to XA back at 325, BC at 315.73, target 1 at 299, and then target 2 at 282. Obviously too early to tell. After the HSI, we still don't have an HSI arrow triggered yet, so this could continue pushing up here. Maybe you come and reset the RSI somewhere around the 330. You test a 90 EMA, because that's so far what I've been riding the triple Q so far. Lowest it's ever gotten tested was a 21 EMA, so you could cool down a little bit, come back down to retest 329, 330 here, and then continue pushing upwards. Or you just next week before these important data points, you just continue pushing. So the triple Qs looks a little bit overextended on the daily here, so definitely would want to watch out for that. Levels here have nothing. After you lose 325, you come back down to lose 318, which is a very key important level where the triple Qs did break out of. So if you lose 325, close to the 21 EMA, the next level I'll be looking at is 318.72 to the downside, then 315, and then 299 to complete that type 1 reaction off of this bearish bat pattern. On the weekly, we have no harmonic pattern, but we could look at here that this is almost overbought as well. Still has some room to the upside. So we will definitely keep seeing if this is going to continue pushing upwards here. So there is a harmonic, there is a gap up here around 348. So if the triple Qs continues pushing upwards here, you can see it go past 345 on the daily HOP target and to 348 where there is a gap. Just let me draw this out for you guys here. So there's a gap here. I believe there's another gap. I think that was it. So there is a gap, a daily gap here that it could continue going up to that 359. It starts at 357 and then 359. So there is that gap. Oh, there it is. Sorry. There's this gap here. Hopefully I drew that right. Yeah, so there's a gap here between 347 and 349. Or no, sorry, this didn't. I think this is it. Yeah, there we go. So 349, 347, and 348. So if you go push upwards towards top, look to fill that gap, and then potentially come back down because you are a little bit overextended here on the daily. So definitely keep an eye out on the triple Qs. Jumping over to the Dow Jones here. Move some of my drawings here. So the Dow Jones here on the daily, you do have a bearish bat pattern still at play. On Friday, you went as high as 336.45 before the low being 333.32 and closing the day at 334.19. So the Dow Jones here has completed the type 1 reaction to target 1 at 330.96. So it did close. It failed to stay above the 21 EMA, and it's now just slightly above the 50. So you could come and test here around 333, find support, and then continue pushing back upwards. You did cross the midline here off the HSI. So if it continues up to that overbought zone on the HSI, you can see 340.27. Finding support here at 340.27, then you can see hop or more continuation to the upside. Should you lose a 50 EMA here, you potentially come and test a 200 EMA on the daily, which is at 330.96, and then coming back down to 327 and then 324.86. So triple Qs is is in a very tight range here. You could potentially are creating here the lower lows and lower highs. So it will be interesting to see if you could come back up and start creating higher highs and higher lows to shift momentum here, but too early to tell. Definitely have to keep an eye out on that one here. You have in the weekly here a doji candle, so you could potentially start looking like a potential double top here. You did get rejected here at the top, so anytime we cross this line, we kind of been rejected. We've never found we never were able to, we never crossed above this level here at 345.30, 345.35. So no harmonic on the weekly. The weekly did increase in volume to prior week, but you are now left in an indecision candle here. So definitely keep an eye out on that. You can have a situation here where you have that double top, and then a neckline would be somewhere around here, and then test the 200 EMA. There is a gap here all the way to 311. So definitely keep an eye out on the Dow Jones. So let's jump over to Apple here. So Apple, let me remove my drawings here. Apple went as high as 176.39 on Friday, and it went as low as 174.94 before closing the day at 175.16. So what can we expect here for Apple? So Apple is, in my opinion, a little bit overbought here. If we're looking at this range here, you see that the RSI from Feb to now, bring this a little lower here. From right here to right here, there's a big RSI divergence, a bearish RSI divergence. So this doesn't mean that that a potential downside is supposed to happen. Potentially could indicate that. Let me bring some of my drawings out here. Just going to remove this line, but there is an bearish RSI divergence. So in order for that to play out, you obviously have to see a rejection here and then come back down to fill certain levels. Or you can have the RSI continue to push back up above what looks like here 74 and change. So if the RSI gets above 74, 75, the RSI would, in quotations, correct itself, so that RSI divergence would be invalidated. So, but if it's starting to signal here that the RSI divergence is potentially playing out, we definitely could come and get rejected here, come back down to the 21 EMA at 170, maybe filled up that gap at 167, come back down to 166.25, and see if that is where Apple finds support. Because if you do break down from 166.25, in my opinion, you can come down all the way to 156.74, fill that type, test that type target 2 here at 158. So it's a little bit interesting with Apple here to see if this is going to be continuation to the downside. You're a bit overextended. RSI divergences, bearish RSI divergences everywhere. So you jump over to the weekly here. The weekly, you had a beautiful type 1 reaction all the way to target 2 and extending here almost to the 786 here of the harmonic bullish bat pattern. So if we take a retracement tool here, the fib retracement tool here, the 886 is at 176.24, and I did think we hit that on Friday, 176.39. So if this continues, the 100% retracement would be the all-time highs at 182.94. After that, if you somehow Apple decides to continue pushing the 1272 of this harmonic bat pattern, would be at new all-time highs at 198.20, 198.93. Crazy to say that, but it's crazy to say that Apple right now, it's about $7 and change from reaching all-time highs. The volume did increase here slightly, or just average volume compared to last week. So on the weekly, I think you're almost close to that overbought here. You're at 68. So very interesting to see what Apple is going to do here into this week. But keep an eye out on Apple. Jumping over to Microsoft here. So Microsoft did go as high as 318.75 on Friday. The low was 316.37, and it closed the day at 318.34. So what can we see here for Microsoft off of this bearish bat pattern? So the next target Microsoft is calling for harmonically here would be that 330.41 before we potentially start seeing maybe an HSI arrow signal generated here, or an HSI dot to generate it back down to test 304. BC at 292, fill this gap, 272, and then 249 target 2 off of this pattern. Too early to tell, but the RSI is a bit oversold here, and you are coming down right now. So definitely have to keep an eye out for Microsoft to see if there's more continuation to the upside. The HSI is saying that there's still more room to the upside. So definitely just be interested to see if there's more continuation on Microsoft here up to 330. I do believe there's might be a slight gap up here on the daily. Oh no, there isn't. So Microsoft is a little bit overextended. I wouldn't be surprised here if it actually comes down to test maybe the 90 MA at 313, at worst 304, and then continue riding back up to reset the RSI. But Microsoft still showing strength here, so we'll definitely keep an eye on Microsoft. Just let's take a look here at the weekly. The weekly, you had this bearish Garley pattern where you close above 297.89. So Microsoft's kind of similar situation, not as close as Apple, but you are about 9%, give or take, to reach all-time highs, right? So the all-time highs here was for Microsoft at 349.67. So definitely not that far away here, but the RSI is on the weekly is a bit oversold here. So definitely keep an eye on Microsoft. If on the weekly you have this Garley pattern, which you have yet to do a type 1 reaction to test target 1 here. So if you don't find support off of where you're currently at, you could lose 318, 303, and then 297.89, and then fill these gaps. So definitely keep an eye on Microsoft. The volume in the past couple weeks here has been decreasing, so you could be buyers could be overexhausted here. So definitely keep an eye on that. Next one I want to talk about here is NVDA. NVIDIA, what a crazy ride this thing has gone through. So on Friday, it did go as high as 315.80. The low was 309.16 before closing the day at 312.64. You continued, and you finally, my analysis was right on this, that this was going to potentially hit 315 before it even came down here to do a type 1 reaction down to target 1 here at 215.03. You did test here 315.03 here. I think on Thursday, if I'm not mistaken, you did close above it, and on Friday you fell below it. So definitely going to keep an eye out on NVIDIA to see if you're overextended, because right now there's a huge bearish divergence starting from it starts from January, I believe. If not maybe just March here, but from here to here, even if we take it from March here, there's a huge bearish divergence there. So if it's just potentially starting to play out, you could come back down to test the 90 MA here at 300, but call it 300, and then potentially 292.20. As we've seen in the past, the 21 EMA on NVIDIA has been a key critical level of support. As you could tell here, you did fall below it here, but you quickly regained it. So these EMAs are starting to curl up high here, so it looks very almost like an ascending wedge here on different time frames. So if you come down, test, lose 292.20, and then finally lose a 21 EMA, you could potentially come down to 268.79 where the 50, and then you could potentially just knife through all the way down to target 1, potentially. So also with NVIDIA here is also approaching these key levels here where you could break up to 323.10 here, and then potentially hit all-time highs here, which is all-time highs for NVIDIA is at 346.47. So you really have nothing here. So at any given moment, you could just potentially just ride this up all the way to potential all-time highs. Crazy to say the least of what's going on with NVIDIA. Volume did increase this whole week. Obviously, big important thing to note that they do have earnings this week. So they have earnings on Wednesday after the bell. So could this have been also a potential priced in movement? Who knows, but it's definitely going to be fun to see what's going to happen with earnings here. If you're looking at this from NVIDIA just has been on a crazy run. If you bought these NVIDIA here at the October lows here, from 1 year from now, not even a year, I think it's 6-7 months if I'm not mistaken here. If you bought at the low here and at the highs here, you had a 195% return on your investment in just a couple of months. Crazy. You look like you're doing a V-shaped recovery here potentially. So on the weekly, you are overextended. The weekly is even scarier to see here that you have an RSI divergence as well. So definitely keep an eye out on NVIDIA. Actually, you had that RSI divergence here, but this week you kind of invalidated that right now. So there's more continuation here. It's just crazy to me that this is where NVIDIA is at, but it is where it is. So next level, I'd be looking to see if you break 223.10, there's a good chance that you potentially test all-time highs here. So definitely keep an eye on NVIDIA. Jumping over to Tesla here. Let's go on the daily real quick. So Tesla here on the daily. Let me remove some drawings. There's a lot of levels I have here, but let's just look at the harmonic ABCD pattern here on the daily. Finally, Tesla here broke above 177 here, and you closed above at 180.14 on Friday. So it's good to see that Tesla is coming back up here. Had the 921 crossover, so off of this ABCD pattern, if there's more continuation into this week, you could see target 2 at 192.71. In my opinion, if you get above that, you have that 200 EMA here at 198, and there's a good shot at a potential $200 target. And after $200, I could see 225 harmonically. The volume did start to increase last week, so definitely good volume coming in. So we'll see if there's more continuation to the upside. The HSI is a little bit here, has still more room to go to those overbought zones, which could, in my opinion, would take it to that 192.71 target. So if you fail to close above target 1 here at 177, if I bring out my drawings here, if you fail to close above or stay above 177, the next target I'd be looking at is 174, and then losing 174, you come back to 168. Capitulation again starts here, in my opinion, at 164 again for Tesla. So as long as Tesla, if you're long in Tesla, as long as you hold at 164, it looks good, more continuation to the upside. Otherwise, you lose 164, you come back down a hop here at 147.06, where the gap is. So if we jump over to the weekly here and see what the weekly is telling us here harmonically. Harmonically, you have a bullish bat pattern where you close above BC here, finally here at 171.46, and you could potentially come and test that 200 EMA here at 184 into next week. And then, as you could tell here, has that target one here for a type 1 reaction again to 221.26. So definitely keep an eye out on that. The volume is starting to also increase as well. The HSI looks like it wants to touch that midline. Still too early to tell, but Tesla looks good as long as you are above 177, 180. So jumping over here to Amazon. So Amazon also had a good ride this week as well. It went as high as on Thursday, went as high as 118.80. Friday, he closed the day at 116.25. So Amazon here, potentially you do have a harmonic bearish bat pattern potentially playing out to do a type 1 reaction, which would bring it down to 103.67, and at worst here 97.73 at worst, depending on who you are, right? If you're long, obviously, if you're short, it's better, but The volume on Friday was decreasing volume here. You were a bit overbought here on the daily here coming Thursday, and you're potentially seeing some downward pressure. At least maybe you come down to here to 113 before you find support here. You do have a potential golden cross potentially playing out here. This would probably take maybe a week or two to play out depending on how much Amazon pushes into next week. So what can we expect here? You have a couple of things here. Bring up my drawings. Just didn't go all the way across here. Let me just remove this here real quick and bring it. There is a gap up here. So if you continue breaking up above 117, there's a good shot you could see 125. Anywhere between 125 and 121 is where I would see Amazon go to potentially here. So if we go back and look at this previous harmonic pattern here, this bat pattern, the 382 here is at 121. This is the next target I think Amazon goes to if it closes above 118. You have that 121.09 and then that gap fill, and then the 618 here at $130.82. So definitely we'll keep an eye on Amazon here for more continuation to the upside. And as far as the weekly here goes, you do have a bullish bat pattern where you are potentially testing and completing that type 1 reaction up to target 1 here at 122.39, where there is that gap fill here above 126. And you have a good attempt here with volume increasing here. The RSI still has room to the upside before it gets out over bot zone, and as well as the HSI and the RSI have more continuation. You may have some resistance here at 120 off the weekly 200 EMA, but if you cross that, you can see that 122.39. Otherwise, if you get rejected here, you come back, test 110, fill that gap at 106, and then come down to XN and the 354. This is obviously off of the weekly, so this would take some time for that to happen. So Amazon still looks at least good. Maybe you are be consolidating here, maybe reset a couple indicators here, but it still looks good to the upside. Jumping over to Google here. So Google also amazing. What an amazing run Google has had this week here. It went as high on Friday as 125.97 for closing the day at 122.76. So harmonically, if we jump over to the weekly, it hit 125 here. So what can we see here for Google coming into next week? Should it continue more room to the upside? So we have to look here at the weekly to see where that could potentially go to. So the crab pattern, this bullish crab pattern that's been playing out on the weekly for Google, completed the type 1 reaction all the way to target 2 at 125.49. So if this is to continue here, the RSI is still not overbought. The HSI looks like it wants to continue pushing back up. AMP RSI is almost at overbought zone. You can still come up above here at 90. So what can we expect here? If we take a fib retracement tool as the next target here for Google, if you break this 125.49, the 786 of this bullish crab pattern is at 136.95. Then obviously you have 143 and then 151. So 151 would obviously be anything above 150, 155 would be all-time highs. But I'd be looking at here for breaking above 125 and then seeing if you can hit 136.95 off of this 786 here. So if there's more continuation to the upside, we'll have to wait and see. Otherwise, if this is giving us an indication that this was resistance, you can come back down to fill that gap around 113, come back to target 1 at 109.39 off of the weekly crab pattern here. So off of the daily here, this alt bat, like I said, if you come back down here, you could look to test 117, right, and then come back down to 115, fill this gap, test the 21 EMA as well, which is around that gap fill at 113, and then you come down to 110 and then potentially 1 to 130. So definitely keep an eye on this. There's a lot of things going on with Google, with AI and all this stuff. So you are a bit overextended here on the RSI and the daily. So definitely see if this is at least cools off a bit. Maybe you come and test a 9 EMA. So definitely keep an eye out on Google. The next one I want to cover is Meta here. So Meta did go as high as 248.69 before closing the day on Friday at 245.64. I was sharing with my Discord here what it looks like it's a repetition of what happened over here. I know this is a very wonky thing to look at and say it's a inverse head and shoulders during this time period, but if you bear with me and entertain me a little bit here, you can see the wonky inverse head and shoulders where you played out this inverse head and shoulders to the upside. It's a very similar situation happening here. I know it's hard to tell, but it looks like it's almost similar to this area here. I don't like fractals or anything like that, but it just looks kind of similar here for continuation to the upside. You did, I believe you entered the gap here, so where did my drawings go? There is a huge gap. Let me just draw this out real quick. Right here, we'll take the gap here from, what is this, from 289 all the way down to, I have to bring this drawing here, sorry about the dog. From 289 all the way down to about what is the high here, 248. So you are finding some resistance potentially here. What did you hit high here? 248.69, so you did enter this gap here, so there's a huge gap here. So what we can expect for Meta, and Meta here has been also one of these other crazy tickers that if you got in at the bottom here, that's an almost, let's bring out here, give me 1 second, a little hard to do, but this is almost an 186% return on your money if you bought at the bottom here. This could potentially do a V-shaped recovery all the way up here to where it did capitulate from here. So if it's a continuation, I did say that on my previous videos that you could see Meta this week test 251. I was a few dollars short, $2 and change short from that happening, but you could potentially finally, I know this is past the 30 bars here, but you could potentially test 251.26, and if you find support here, there's more continuation, you fill that gap at 287 and complete that type 1 reaction up to 302.07. Should you find resistance here, you can come back and test 240 and then 234, fill this gap all the way at 215, and then in my opinion you do not want to lose the 50 EMA on Meta here, because you can come back down all the way to 186, fill gaps, and then come capitulating down more to the downside. So what are we looking at here with the weekly here? The weekly does have a bullish crab pattern where it essentially hit that target one here that completed that type 1 reaction at 51.26. Same thing with the daily pattern here. You have target 2 at 307.07. So if we're looking at the RSI is a little bit overextended here, and there is a slight divergence, bearish divergence here on the weekly. So this could be all she wrote. Like I said, if you lose 20, if you get rejected here, you come back down to test the 200 SMA here at 234, and then come back down to 215. So definitely keep an eye out on Meta. Lastly, I'm not forgetting anything. I think I'll cover the regional banks here, KRE. So since the banks are still kind of giving us a little bit of trouble here in the market, what can we expect here with the regional banks, which I think is something that should be taking a look at now. Off of this this bullish bat pattern, you did generate here an HSI arrow on the weekly. So you did close above XA here at 38.65. So the next level harmonically would be 51.44. Should you fail the 38.65 XA here, you can come back down to terminal at 34.52 and then hop at 27.09. So you're a bit still oversold here, trying to get back above here. Definitely we have to keep an eye out on the banks. One thing that you should look at here is there is still a possible death cross approaching here on the SMAs. The yellow is a 50, the 200 is red here, the SMA. So if you cross over, you can see more downside here on the regional banks. So definitely keep an eye out on the regional banks. Lastly, I think that's all I wanted to share. Or one more ticker here, AMD. AMD, what a ride AMD has done also. One of the things I've been looking at here For AMD, you're starting to generate even crazier numbers here for harmonics here. Bearish bat pattern on the daily. You had potentially just about 101, 102 if I'm not mistaken, but now it's calling for hop at 117. So you did generate a new harmonic pattern. You overextended that leg, that point D leg, because if we know that the bat pattern goes up to the 3618 here, so if there's more continuation, that's where it's calling up to hop here. So you did generate an HSI arrow on the daily, HSI to the downside with this doji candle, but the volume did decrease on Friday. So you could come back down, test 103.30, find support, maybe consolidate. You let the RSI cool down a bit because it was a bit overbought. Find support, and then continue on its quest back up to 117.33. If the HSI arrow is finally indicating and telling us that, hey, this is it, potentially you can come back down to that, do a type 1 reaction. You lose 103.30. You have BC here 95.68, and then the target 1 here for that type 1 reaction will be at 87.65, and then at worst here at 75.02. So definitely we'll have to keep an eye out on AMD as well, because of NVIDIA earnings play. I do think you will have some I think some of the reactions, some of the potential earnings that NVIDIA comes out with could also affect AMD here, or the chip sector in general. So the chip sector is definitely something that should be looked at. To give us an indication of maybe it's reaching tops here, but there's a lot of things going on with AI and NVIDIA and AMD, so definitely keep an eye on more continuation here. There's a lot of levels here. I do think there is a gap up here, if I'm not mistaken. I don't know where my drawings went, but there is a gap here. So if you see more continuation on AMD here, that's exactly where hop is. This gap fills at 118. I do have a target here off of AMD at 120 being a key level of resistance here. Let me take a look at this previous harmonic bat pattern to see if it gives us any levels here. Any 120 levels, 106, 114, 140. Yeah, so there's nothing here. If we push above here, there's nothing here. If I take auto support here, gives us a better indication of where there's level of resistance. You have nothing here above 109. You have here, this is saying 125. So if there's more continuation here in the market with the chip sector, you could see AMD also do some crazy things as Big Brother has done, NVIDIA. So that's all I have for you guys. I know this was a longer video, but I do think there's some things that we should be looking at in general to see if there's any more continuation in this crazy market, or we're finally coming back down. Too early to tell. Will definitely give us a better indication with these data, with the data that's coming out. So having said that, I will be streaming tomorrow 15 minutes before the bell, so if you want to catch me on that, I will be streaming on Twitch, so a link to my Twitch is in the description box below. So other than that, I hope you guys have a good rest of your Sunday, and take care everybody, and peace.